The language has changed, and probably I've been a bit on the more constructive sort of end of things. I do think that policy support will come if it's needed, but also if we take a step back, we've seen data has been improving in China. If you look at sort of PMIs, you look at retail sales the past couple of months, even sort of sales sort of on the property side, property sales, even that sort of data point has been improving. Is it going to be sustainable? That's the big question mark, because we've seen the story before. Again, it happened sort of back in sort of April, May time, and I think the view here is that probably we will see more policy support, and it's important because there's been a lot of talk about the yuan. Right? Is the yuan going to be the shock absorber? Yes, it will. Could it move lower? Yes, it probably can. I don't think it's going to be abrupt. I don't think policymakers want to see an abrupt move in the currency. But if we take a step back, if we look at Trump's first presidency, the yuan did sort of depreciate by almost 10%. So we have that precedence. If the tariffs end up being sort of on the worst end of the spectrum, we could potentially see sort of more weakness there. But at the same time, if you look sort of so far this year, what the yuan has done versus the dollar, and if you compare that versus the other main trading partners for the US, Canada, Mexico, Germany with kind of when I think about euros, Japan, Korea, they all have depreciated a lot more versus the dollar than the yuan has. So you could even argue that the yuan has a little bit of catch down to do just kind of for a more playing field.
That's an interesting point. So we look about 4% since Trump's victory, and it looks like if they're talking about 7.5%, the authorities, as per Reuters sources, that would, I believe, according to some analysts who've been sort of crunching the numbers, only be 3.5% below where it's at now, which takes it to not even 8%. Compared to, as you say, the plus 10% declines we saw between 2018 and 2020. So we're not going to see as much as a shock absorber, as you're saying. Again,
it depends on where the tariffs sort of end up landing,
yes.
and again, how much of that is negotiating tactics sort of before the presidency. So again, it's a wait and see, and also the policymakers are in a wait and see. But while the currency can be a shock absorber, what China is facing right now is disinflationary forces, and the best medicine for that, rather than depreciating the currency, where you could end up seeing imported inflation, but that's not the right sort of remedy. The better remedy is more sort of domestic support, helps rebalance the economy, helps sort of stimulate consumption, and at the same time, if we did actually end up seeing more domestic support, that will help lift imports. Should that, if that was to happen, that's a better negotiating sort of a card for China, because it helps with the trade balance versus the US, right? Yeah. So kind of, the domestic policy support, we think is the missing key here, and we do think more of that gets delivered, and as a result, we end up seeing sort of more sustainable growth coming from China in coming months and quarters. But we have to wait and see what is the damage done when it comes to tariffs. I don't think we're going to see anything meaningful before we have more visibility on that front.
Absolutely, and I think that's exactly what the authorities are waiting for, isn't it? Just a little bit more visibility before they come up with the size and the scope of that policy offset, as you're talking about, and to address the confidence deficit that we're seeing over in China.
Yeah, indeed. You like Chinese mid-caps?
Yeah. So China's mid-caps, why? Because they're less exposed to what's going on the trade front. I guess the offshore market is a little bit more sort of sensitive to that. Also,
mid-caps in what sectors?
Sort of broad mid-caps. This is just the CSI sort of 500, so it's sort of more broad-based rather than sort of stock-specific or specific, more on the sector side. We have seen, when it comes to onshore, we have seen places like energy and consumer staples having a little bit sort of better earnings than the rest of the cohort, but this is more mid-caps, because mid-caps, again, less affected by what happens in the trade war and a lot more sensitive to what happens on domestic policy. And again, we do expect to see better domestic policy. And also, I mean, the housing has been a big, the big pain in China for the past couple of years. But we think that that's going to start dissipating. And that's a big difference versus the past couple of years, one that we cannot sort of, forget about. Yes, it's been very painful, but we think that the worst is behind us when it comes to that. And that, again, can help with consumer confidence and consumer sentiment. And again, we already see very, very early signs of that sort of improving.